This is Euro USD, yesterday's price action review. Today is Wednesday, 17th of September, and in the 4-hour time frame, you see that we had a massive push yesterday to the upside. Very nice big expansion candle to the upside, and then we had this candle right here. Do what? It goes above and fails to close above the previous 4-hour candle's high. That means this was a turtle soup, and if you scour through the price action or previous price action, you'll realize that this might be actually be tapping or be reacting of a fair value gap. Now this closing below this range, the next thing we think of is price is going to drop lower, and because we have a fair value gap here, we may want to see price come into this fair value gap, at least to the half part of it, right, the top half of it, to cover it, and then most likely get a reaction, and then to continue higher or to keep pushing price higher. But prior to that, with that in mind, I want to apply the power of 3 model here. So this, or the CR3 model, they all look the same to me. So this is the CR high and the CR low. This is when you're using candle range theories as your model to predict bias. So with that in mind, second candle, it gives us a turtle soup, sweeping the high, the high of the previous 4-hour candle, and closing below that high. And with that, we have in mind that price is likely to go lower, and now we want to form an idea that will give us price going lower, and this is why we introduce dealing ranges. So this dealing range, this second candle will give us that dealing range, right? And then now we want price to come into in the third candle, we want price to come into the premium side of this dealing range and then drop. And remember, we have our targets at the half of this fair value gap, right? So with that in mind, we want now to go into the lower time frames, 15-minute time frame, and we find an area of value where price is likely to react off in the premium side of this dealing range. So in the 15-minute time frame, you can see there's nothing solid. We got the 5-minute time frame, and there is something that we can use to get you have this massive fair value gap. Now this, because price has closed lower, this is an inverted fair value gap, and with that in mind, we want price to react off this fair value gap. Immediately the new 4-hour candle opens, price to come into it and then drop lower, and so you realize we have a very massive fair value gap. So you want to drop to a lower time frame and refine this fair value gap. And this inverted fair value gap, we can see now we have something solid within the premium side of this dealing range. We have this fair value gap, which is now it is much smaller, and it is now usable. So when you look at it, the new 4-hour candle opens at this point. It is in the premium side, but at this point it is not really reacting off an area of value that is valid for us. So we wait until you come and price comes back to it. Now at this point is now where we have price reacting off this inverted fair value gap in the 1-minute time frame. And with that in mind, you can see we had price go into it, then a bit of consolidation, sweep of liquidity to the upside, and then a drop lower, and price is giving us an engulfing candle out of this out of this inverted fair value gap after sweeping this liquidity, and now that gives us a reason why we need to have a dealing range there. So with that dealing range, this dealing range is helping us to define where we can get an entry, and with that in mind, we get an entry at the 50% of this dealing range at this point right here when price is coming back up. And now our stop loss will be above that inverted fair value gap, and then we start now hunting for those take profits, and until we get to the other to the half of that fair value gap, or the 4-hour fair value gap that we used. So with that in mind, we can have a first take profit at this point, and then looking below it, you can have a second take profit at this point, right? So 5-minute time frame, looking at the 5-minute time frame, I want to think this was the 50% of our fair value gap, the 4-hour fair value gap. So that also becomes a target, which will be our final target. So now that is in place, you have first TP at 2.88 and the second TP at 6.5, and then we have our final TP or take profit at 12.62 risk to reward ratio. And so that is how you would have participated in this trade. And because you are at the 50% of this fair value gap, we are expecting price to react off this 4-hour fair value gap. Let me just show you. For our fair value gap to read price higher and sweep these highs, but we'll still need to have a solid framework or a solid reason why you would want to take price to this point. So this is not yet a reaction of this fair value gap. Only thing you can do is wait. But based on this CRT model, that is how you would have participated in this trade and bagged a whole 12.62 risk to reward ratio. And that is it for Euro USD price action review. Until next time, bye bye.